Hey everyone, welcome back to Yield Curve Trader. Today, we're diving into a financial mystery. How does a company report a record-breaking $26 billion profit, grow its revenue by 33%, and still see its stock get absolutely hammered? That is exactly what happened to Meta last week. If you're holding the stock or thinking about buying this dip, you need to see what's happening behind the curtain. Let's break it down. The headline numbers. First, let's look at the paper. Meta's Q1 2026 was on the surface a total blowout. Revenue, $56.3 billion, up a staggering 33% year over year. Operating margins, a massive 41%. For a company of this scale, that kind of growth is almost unheard of. So, why did the stock drop 10%? Because Wall Street isn't looking at where Meta was. They're terrified of where it's going. The AI money machine. Now don't get it twisted, Meta is still a world-class advertising machine. Nearly all that revenue comes from ads, and the secret sauce right now is AI. Meta isn't just hoping AI works, it's already generating billions. It's using AI to predict your next purchase, boost ad conversions, and keep you scrolling longer on Reels and Instagram. This isn't future potential. AI is the engine driving the cash flow today. The Capex Bombshell. But then came the Capex Bombshell. Mark Zuckerberg announced that Meta plans to spend between $125 and $145 billion this year alone on AI infrastructure. We're talking massive data centers and a mountain of AI chips. This was a huge hike from their previous guidance, and it signals one thing: the AI arms race is getting incredibly expensive. Investors are asking, can revenue keep up with these exploding costs? Right now, the answer from the market is a nervous no. The hidden warnings. And it gets deeper. That $26 billion net income, it's a bit of an illusion. It was boosted by a one-time $8 billion tax benefit. Without that, the earnings beat looks a lot less dramatic. And here's the real hidden red flag. For the first time in history, Meta reported a sequential decline in users. Daily active people fell to 3.56 billion. Management blamed internet blocks in Iran and Russia, but a shrinking user base on an engagement machine is a signal you cannot ignore. The real trade. So, here is the real trade. Meta's guidance for next quarter is actually strong. They're looking at $58 to $61 billion in revenue, but Zuck is making a multi-year bet. He's telling you that this isn't a one-time cost. It's a multi-year spending cycle. Can AI generate returns fast enough to justify a $145 billion bill? That is the trillion-dollar question. Meta delivered a perfect quarter for the past, but a very expensive one for the future. Wrap up and outro. Bottom line, AI is driving the growth, but it might be cannibalizing the margins in the short term. That's how you get record earnings and a falling stock at the same time. If you found this breakdown helpful, do me a favor and hit that subscribe button. We break down earnings, macro, and the moves that matter in plain English. This is Yield Curve Trader, and I'll see you in the next one.